Good morning, traders. We're 90 minutes into trading on September 9th, the last trading day of the week. We have a nice breakout on SPY. We are above the 100-day moving average, so conditions are pretty bullish so far today. You can see how we had this early 1OP bullish cycle that's continuing to extend. Since this bearish cross right in here, the market has continued to grind higher. This is what we call a bullish divergence. We could see a little bit of a pullback. What we'd like to see as bulls is a compression near the high of the day. When we get that cross right in here, that is going to set us up with another leg higher. It's a good chance today could be a bullish trend day higher to finish the week. So that's what we'll be keeping an eye on. We are going to be looking at some bullish picks, but our last pick was actually a bearish pick. Why? Because that's what the market was telling us to do. The market had a very steep sell-off, and we were looking for stocks that had broken major support. This is a beautiful upward sloping trend line, and I'm going to show you when you can change your thesis on an underlying stock and how you should go about doing that. I don't do that very often, especially not on a swing basis, because there's so many things that have to go into getting you to have confidence in one particular direction that those things don't just change overnight. So we're going to take a look at CRWD because that was my bearish pick of the day. I love this tight upward sloping trend line with lots of touches. And you can see earnings right there, big long red candle. That was the reaction. This is what we were looking at for the short position. And the video came out on September 1st, right in here about an hour after the open. So we did have some follow through selling in that stock, but if you overstayed your welcome, you had to stop out on this long green candle here, especially when it took out the open from this red candle. So here's the trend line that we were leaning on, and we are keeping everything very short term right now, sticking with day trades. Market's been very volatile. You can see that is the breakdown that we like. We also had major moving averages supporting that trading decision. So let's put those up. And there you can see. Now the stock is above the 100-day moving average. Now it's above the 50-day moving average. Now it's above the 100-day moving average. Would I get bullish? No, I wouldn't on this one because I still need to get through more technical resistance. You can see how this downward sloping trend line is still intact. If the stock can get through that, then yes, I would change my thesis on the stock and I would start to get more bullish on it. So we can draw that in. I might as well because I have it on the chart. So we're going to connect that top, and you can see how that comes into play right around this horizontal resistance as well. So I might as well drop an alert line there, and that's where that bullishness would come into play, and I will get an alert to that effect. It's at about $205. You can see how, okay, this was not a good trade. Now I know I'm short term and I've got some indications that this stock, especially on a long green candle like this, is going to find support here. We've got tails under body, so the stock really hasn't been able to go down very much. The market was actually starting to rally in here, as you'll see from the daily chart that I put up. So time to be a little bit cautious in here. You get your short on. Okay, yes, there were opportunities. The stock retained its relative weakness, but not very good because the market conditions were changing. Now all of a sudden you get a long green candle like that that closes above the 100-day moving average. Take out that open there. You have to get out of your short position. You were wrong. Okay, so should have been a relatively minor loss. Now you're happy that you got out and you took your loss. And now you can see how the stock is starting to challenge these major moving averages. Still got to get above here for me to be bullish on it. Why? And I get this, gosh, I get this so often. I see people trading stocks. We want that support to be cleared. We want nothing in the way. I often reference giving Barry Sanders the ball at the 50-yard line with no one in front of him. He's going to score a touchdown. Nobody's going to catch him. That's the kind of situation we want. And to clear all those obstacles takes a lot of effort. And you can see here we had upward sloping trend line, breach to the downside, major moving averages, breach to the downside, downward sloping trend line. Those are all things that support being short because we have a clean path to the low of the year. Look at all that space right in there. That is what you want. So, Pete, why wouldn't you buy this stock right now and be bullish on it? Because it's still got all this garbage in front of it. It has that resistance, that resistance. Yes, I'd like to see it get above that line. This is going to be redrawn to connect this low now, but it's still relevant for a few days. I'd like to see it poke back above it, but I have this downward sloping trend line. I got this horizontal resistance. I don't want to be playing with the stock in here. I want to be playing with it here when it's breaking out on massive volume and stacking green candles and attacking those resistance points, because when it does that, I know that buyers are fully committed and I have lots of room to the upside. No resistance, no little herky jerky back and forth. Boom, boom, boom. That had the potential of holding true right here. If we had a declining market, you would have seen a couple of long red candles. So just wanted to discuss that, discuss changing your thesis on a stock. Even if you're day trading, you should have a thesis on a swing trading basis, a longer term basis, a D1 basis, because that gives you conviction to trade that on an intraday basis. So in this case, CRWD, you're not going from, gee, this is a great short, to instantly, gee, this is a great long. No, we got to get through all of this stuff. If it can do that, fantastic. So let's take a look, see what the market's doing. A lot of information to go through here as well. We've got the daily chart. You can see, okay, first of all, this is a nice big rally that we had in July. Okay, get through all the major moving averages. We can overlay those. We'll put the 200-day up. You can see how the 200-day moving average was rejected. Test, 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 wham. This is a nice rally, but this move also needs to be respected. You can see that it retraced almost all of these gains. So that tells you, yes, there are buyers. This came on relatively light volume. That is a massive retracement. If we were in a go-go bullish mode, what you would want to see is rally up, pull back to right here. Now you get a little bit of a rally here. Okay, this could be a bullish flag forming. Take out that downward sloping trend line, close here. Yeah, then you're going to challenge that 200-day moving average. Away we go. That didn't happen. We got this super long red candle, and that actually came after the FOMC statement. That was a sign that there was some heavy selling pressure. So we come down. Now we start overlapping candles and we start compressing down in here, which is a sign of support. Yesterday, excuse me, 2 days ago, so we get this long green candle off of this low. Okay, that's nice. Then yesterday we came back and we retraced half of that long green candle and we found support there. Okay, that's nice. And then the market started to rally. We'll go into that 5-minute chart and we'll see. But this pattern, I explained this yesterday in the chat room, this day was quite bullish and it set us up to test the 100-day moving average today because it was able to hold half of that long green candle and it was able to finish on its high of the day. Buyers are going to look at this and they're going to be satisfied that there is some support here. We also had some other technicals that were coming into play, like that upward sloping trend line right there. I can draw it in for you. And we've got some touches here. You can see that upward sloping trend line held. We also have horizontal support at SPY 390 that held. Wham, 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 wham. Well, you test it enough times and it holds, they're going to go the other way with it. So they're going to try and retrace some of this move. Where does this stall out? Is this breakout above the 100-day moving average legitimate? Well, right now, today, day trading, yes, it looks pretty dang good. So we want to see the market close on its high today, and then we want to see some follow through next week on Monday. If that's the case, then yes, we could see some further upward price movement here. We also have a downward sloping trend line right here that we'll be able to see a little bit better if we zoom in and go to maybe a 2-hour chart. And there you can see, there's where your downward sloping trend line comes into play. So let's click this here and let's click that here, and that should draw it in for us. And you can see it's been violated to the upside. So I don't see any other shorter term trend lines, but there you can see it again a little bit more clearly. We're testing it right now. So if we get through that, that's another resistance level that's been violated to the upside. So yeah, those are very important considerations, and that tells me that you can already see that there is some upward momentum to this bounce. We're going to be looking for a bullish trade. What would get me bearish again? Well, if we start seeing this move right here and this bounce stall out, and now we get compressed candles and it starts to roll over, I'm still not going to be bearish, but now I'm going to be leaning on this upward sloping trend line that would come into play here. I'll be leaning on those major moving averages. So if the market comes up like this, then you get a long red candle through that upward sloping trend line and through those major moving averages, yes, then you can start getting bearish, and we could see another leg lower, perhaps testing the low of the year. September is a very bearish month. Okay, great. I'm not going to let that influence me. I'm just going to follow price right now. If you look at the headlines, they're super, super bearish. You know, we've got energy shortage in Europe and Putin shutting down the Nord Stream 1 pipeline. And we have energy shortage in China. They don't have any hydroelectricity. COVID is rampant there. They've got shutdowns throughout the country. ECB raising rates 75 basis points and considering another 75 basis point rate hike. Powell saying that they're not going to stop until inflation is under control. They realize that it might hurt the economy. They don't care. They have to rein in inflation. These are the headlines right now. If that's going to bias you, then you're probably on the wrong side of the trade. Just follow price, because that's what institutions are doing, not what the media is saying. So that's all we really want to do, is just follow the money, follow what they're doing. That's why we use technical analysis. So yes, we do have an FOMC meeting coming up September 21. Yeah, that could produce some nervous jitters. So until then, this looks pretty dang good to me, and I'd like to see some follow through. But today's price action is going to be very, very telling. And oftentimes on these breakouts through a technical resistance area, it attracts a lot of buyers. And institutions know this, and those weak hands can be flushed out. So on a breakout, you don't want to be the first mouse. The second mouse always gets the cheese. We know what happens to the first one. He's got his head caught in the trap. So you want to make sure that this is not just a little head fake pop through on a Friday. You want to make sure that this gains some traction. So how we finish today is going to be very important to me. Right now, it looks like this is going to be a bullish trend day, but you can see we're getting a little tired up here. You can see how this bearish cycle is gaining a little bit of traction. So here it looked like, okay, this could be a bullish divergence because the market's heading higher during a bearish cycle. Now it hasn't run yet, still got some time. This could come all the way back down here. Start seeing some stacked long red candles. Uh-oh, these buyers early in the day who are buying that 100-day moving average breakout are going to take some heat if we start getting stacked long red candles. If we close below the 100-day moving average, this beautiful chart here and this wonderful little bounce all of a sudden look very, very different. Uh-oh, look, they tried to poke through and right back through those two major moving averages. Look at this beautiful breakout right here. Gosh, that's nice. We had a longer term downward sloping trend line that came into play here. That was great. Yeah, nice upside. Oh, here we go. Look at that. We got through the 100-day moving average. Everything looks fantastic. Uh-oh. Whoa. You can see how oftentimes these breakouts look great initially, but you want to make sure that you have follow through. When you have that follow through, then you can know that that's a legitimate breakout, that it's not simply a head fake. So we'll be watching the price action today. I do still have some stocks that look good on a bullish basis, so that's what I want to highlight. I'm going to, right now, given this part of the day and the type of price action that I'm seeing so far, I'm going to say, okay, I think this is going to be pretty decent uh, bullish price action. Let's see what we can find. So I'm going to go into Pop Bull. Let's see what we've got there. This is a longer term swing scan that I run, and let's see what we've got. We're going to make sure we're in that daily chart. We're also going to be watching this. I'm starting to see a little bit of organized selling for a bullish trend day. You don't want to see big pullbacks like this. You want these to stop before they get organized. This one is starting to gain some traction in here. So let's see what happens. I may even short this one. So I'm going to get ready. I would do small size because I'm doing a video. We'll see what happens in here. All right, so KR, I like this little breakout here. Earnings before the open, that's kind of nice. Upward sloping trend line, that's all good. Nothing too exciting. This is a supermarket, so it's not going to make gigantic moves. MOS, nothing there. Snap. Okay, this is a beaten down stock through this horizontal resistance level. Don't see anything too interesting there, so let's keep looking. Lulu was a stock we traded yesterday. Love this horizontal breakout. Let's talk a little bit about relative strength because this was the poster child, and there's an excellent example of how relative strength can benefit you, and that is why we trade stock and why we do not trade S&P. We have to have our market bearings, and that's why I spent so much time on S&P, but there's a huge edge to trading stock versus the S&P 500. You want to have that edge. So yesterday, I'm going to remove these major moving averages just to get them off of that chart for right now. I'm going to put up the 10 SI indicator, and that tells us if the stock is strong relative to the market. We already know that LULU is breaking out through a major moving average and through horizontal resistance. So we like the stock. It looks good on a daily basis. We're on board here. We're through the prior day's high, stacking some green candles in here. Everything looks great. And then, whoosh. Where the hell did that come from? Well, let's overlay the S&P 500. That's where it came from. The gray line is the S&P 500. So initially, wham, 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 S&P 500 is starting to fall. Look at how well the stock preserved its gains. Didn't even flinch. So if you're long Lulu and you love these candles and you bought a breakout in here and you see that, hey, you know, the market's looking a little bit weak, just like in here, I should probably take some gains. But it's okay because I made a lot of nice money. I got to see this first part of the move. Now I know the market's starting to soften. I'm going to take some gains. Let's see if I can get a better entry point. I'll wait for this market drop here to subside. And then all of a sudden there was some type of news, probably Fed speak. Whoosh. Actually, I think the ECB said that they are open to raising rates by 75 basis points in October. Well, that news hits, the market bottom drops out. What's the stock do? One long red candle, and it already finds support. This is a sign that buyers don't care. This probably flushed out some bullish speculators, but institutions who are looking to buy this stock, they don't care. They don't care that the S&P had a little mini, 20-minute drop. They're in here buying this stock because they want to add it to their portfolio. And so now you get this instant grind, grind, grind back. The market is starting to find support in here. Once the stock starts to gain some relative strength here later in the day, yes, here, you know that the market's not doing anything. It was able to bounce off of that reaction, so the market's fairly stable in here. Yeah, you can start getting back in the stock right here. And you'll notice that if you had bought here, I don't suggest that you do this, but if you had bought here and you just kind of weathered the storm and said, I don't know if this, quick little S&P drop is going to last. I like the stock anyway. You would ride it out and you made money when the market was actually bearish. That is the edge that we trade. And now you can see, there's Lulu. You can see that horizontal breakout there. It's above the 200-day moving average. That is why we trade relative strength and relative weakness when we're bearish. So yes, I do like Lulu. It looks good. It's continuing to move higher, but I think we can find better. This train has left the station. I want to find something that's just starting to break out. And I think I'm going to be able to find a few of these. This is kind of nice. Let's get those major moving averages back up there. Put the 200-day and the 100-day back up, and the 50-day. Downward sloping trend line. 50-day moving average is support. Above the 100-day moving average yesterday. Breaks out through this downward sloping trend line, adding today when the market is strong. Take a look at the 5-minute chart. NET got a little bit of a dip here with the market. It's okay. We want to see it retain its relative strength. NET could work. We're just going to flip. We're going to look. I don't have a stock picked for today, so I'm just going to go through a few charts, see what we've got. This is kind of nice. I actually like this quite a bit. I like the fact that we got D1 relative strength. I like this horizontal support, little test of the 50-day moving average there, clearly through that 100-day moving average yesterday, downward sloping trend line here, upward sloping trend line here. Got a lot of good things working for Airbnb, and it has room before it gets through this resistance level and this little bullish flag formation. You can see there's your flagpole. Downward sloping trend line. This is looking pretty damn good. What else do I like? Well, the fact that it has relative strength right here tells me that the stock did not retrace very much when the market was pounded recently. All right, so let me show you what I mean. Blam, 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 down, down, down. That's what the S&P did in the last 3 weeks. What did Airbnb do? Had a little bit of retracement. It didn't sell off. That's support. That's institutions saying, we don't care about this. We want to own this stock long term for whatever reason, whatever their research department tells them. The economy's doing better. People are traveling more domestically. I don't care. I don't care what their rationale is. All I care is that they are buying, and they are buying. So this sets up for a really nice bullish put spread below that 110 area. That's the 50-day moving average. That's the low end of this compression. You also have the 100-day moving average to lean on. Let's take a look at the 5-minute chart. Airbnb, grinding, grinding, grinding. It's on its high of the day. Let's take a look at the S&P 500 one more time. Got this retracement right in here, but the stock is moving higher. That's relative strength. Orange line above zero. I like Airbnb. Easily could be my pick of the day. Let's take a look at a few more. Right now, that's my fallback. Looked pretty dang good for a fallback. COP, you've got a downward sloping trend line here, bullish flag formation. There's your flagpole above all the major moving averages. Clears that resistance. It's got a chance to get up in here, and then we love it up in here because there is no resistance at all. See if we've got anything else that looks attractive. I'm going to go into some of my day trading searches like heavy buying. Tesla, that's always a favorite. Actually, ZS, let's start with that because I loved this stock and I pointed it out, I think like 10, 15 minutes into the open. Downward sloping trend line, earnings before the open. So you can see this big, beautiful reaction. Now this downward sloping trend line blew through the 100-day, blew through the 50-day moving average, stacking green candles. ZS has a full head of steam. This stock looks good. I think it's going to still have some upside. So I wish that daily chart were a little bit more uh, constructive because it hasn't gone anywhere. So I would like to have seen a little bit better lift when the market was rallying. Tesla, everybody's always watching Tesla. It's got to get through this downward sloping trend line in here for me to have much interest in it. There is a minor downward sloping trend line here that it got through, and it is through the 200-day moving average. So there's a good chance it'll be able to get through there. What do? GTC. Click, click. Now I got an alert line. I'll get an alert line when it gets through this. I'll get an alert line when it gets through that. Yes, then I think it's got a clean path to get to this high and perhaps even more. So yeah, I'm liking that. Take a look. I think we already looked at Microsoft, DOCU. Those are always nice there, but you can see the stock is on its low when the market's near its high, so not too crazy about that. A lot of these little dogs are barking, and that means that they're fairly weak stocks that are starting to get off of a low. Same thing here with net. I had pointed that one out early. These bounces can be nice, but you don't want to overstay your welcome because the longer term D1 chart is still bearish. Now I'm going to go in and just click a couple of others, but I think Airbnb is going to be mine. That's going to be the long I like. Yes, Airbnb is going to be the long of the day. And the reason for it is this is not a dog. This stock has actually done well. It's off of its lows. Yeah, it sold off hard earlier in the year. It's off of its lows. It compressed. It weathered the storm when the market was selling off. Now it's breaking through technical resistance. I don't trade these formations often, but when I see them, I point them out. Head and shoulders formation. That is an inverted head and shoulders formation. Neckline right here, approximately at this high right here. If it gets through that, it's going to go even further. So hey, let's set an alert line there. I really like Airbnb. By the time I do my next video, I believe that it is going to be trading higher. Well, gee, Pete, you just told me market a little iffy in here. You don't know if this 100-day moving average is going to last. You don't know if we're going to see a head fake here. We're going to drop back below it. How can you be so confident trading Airbnb? Well, first of all, I'm focusing on day trades right now. If I start to see that the market is gaining momentum and getting through a couple more technical resistance levels, I'm going to have more confidence in getting long for a swing trade. But if I'm selling it out of the money bullish put spread keying off the 110 area, stock has plenty of room to move around. If I'm day trading the stock, I know that it's got a nice clear path to get up to this horizontal resistance level. If I were contemplating a swing trade and just buying the stock, wouldn't get aggressive with buying weekly calls or anything like that. But if the market did happen to reverse, I've already seen what the stock has done during a market sell-off. It weathered the storm very, very well. And that tells me that institutions want to own Airbnb right here. So that gives me additional confidence to day trade it and short-term swing trade it and sell out of the money bullish put spreads on it. Thanks so much for watching. Please leave your comments. We'll see you next week.